Welcome back. You're watching Market Fatafat on ET Now, a show where we get you all the stocks buzzing based on news flow as well as on technicals. And talking about technicals now, we have Osho Krishan joining us on the show. Very good afternoon to you, Osho. And let me come first to you. Let's talk about the top nifty gainer today then. Apollo Hospitals, where do you see this one headed from here on? Smart gains, this one is logging in today's trading session. But from here on, do you think the ride will be as easy as it is today?
Very good afternoon, everyone. Well, looking at the technical charts of Apollo Hospital, there has been a very strong consolidation near the 100-day exponential moving average on the daily chart. On the levels front, 4900 was the level where we have seen a very strong consolidation base for this counter. But the positive development that can be seen in today's trading session, that the strong price movement has been backed by strong volume numbers also. So from here onwards, one can expect the rally to continue. One more follow-up buying day will be crucial for Apollo Hospital to be seen as the momentum to continue on the higher end. As of now, on immediate basis, 5,000 will be the first crucial resistance zone, and post breaching 5,000, one can see Apollo Hospital at 5,200 in a very short-term period.
Okay, 5,200 in the very short-term period. That's the word coming in from Osho on Apollo Hospitals. But let's move on and talk about Can Fin Home. Why is this one in focus? We have a brokerage note that has come in from Jefferies. This is actually on the housing finance companies as well as affordable housing finance companies. But in the housing finance companies, they prefer Can Fin Home, and that is their preferred top pick as well. What they're also highlighting that the affordable housing finance, that has also underperformed in another segment of the NBFCs on the YTD basis, and they see a few more tailwinds over there. So that is why they believe there's a potential revival in terms of the interest and subsidy schemes that can improve the affordability in the low and mid-ticket size housing segments. Of housing finance companies also should see a gain from the exit of HDFC from the primary debt markets post the merger, and that is something that is they believe that could work out well for these housing finance companies. So in terms of overall, when they're saying that affordable housing finance has seen a better supply and can see a better supply in terms of cheaper NHB funding as well. And other than that, HDFC, which constituted 23% of NHB disbursements in the last 3 years, obviously with that, in terms of just the debt market and coming off of that, that could maybe support some bit of these housing finance companies. So their preferred bet in the housing finance companies is Can Fin Home.
All right, Can Fin Home preferred bet for Jefferies, where Osho, for you also, is Can Fin Home a preferred bet in the home financier space? How is it looking on the charts to you now?
Yes, as on the technical charts, Can Fin Home was consolidating in a very narrow zone of nearly 25 to 30 odd points from past 2 to 3 trading weeks. But what can be seen in today's session, that it has seen a very strong traction on the basis of price and volume both. So from here onwards, one can expect the outburst to continue the momentum on the higher end towards the immediate resistance, which is placed around 817, which is the bearish gap on the higher end. So from here onwards, we are expecting the momentum to continue for another 35 to 40 odd points in Can Fin Home. So for short-term traders, one can definitely look to accumulate this counter for the immediate target of 817 to 820 odd levels.
All right, let's shift focus. Let's talk about a textile player which has actually hit a record high level in today's trading session, and that is Raymond for you. Look at the gains coming in on that particular stock. At one point in time, Raymond was trading higher by approximately 10.5%, 10.6% right now. Also, it's logged in on those gains. Biggest percentage gain coming in for Raymond since December 2022. And why such an up move coming in on Raymond is the fact that today not one but two brokerages have initiated coverage, and both the brokerages have initiated coverage with a buy rating, and the target that they've set is identical. 2,600 rupees per share is the target coming in for Raymond, which actually is the highest consensus estimates coming in from most of the brokerages. What Jefferies has to say is they are expecting the branded textiles business to grow double digits over the medium term, while you have Motilal, which has also initiated coverage saying that Raymond can become net cash after the recent sale of the FMCG business. Also, they are expecting the EBITDA margin to grow at around 15% for the next 5 years, helped by branded apparel, garmenting and real estate businesses. So thumbs up coming in from not one but two brokerages. The stock is perched at a record high levels. That's Raymond for you. The target that is set is 2,600 rupees per share.
Absolutely, that's the brokerages that are saying. But you know what, Osho, I think you have also picked out Raymond for us on the chart. So what is this one looking like and indicating in terms of the technical levels? Already we're seeing 69% uptick in the last 6 months. How much more upside?
From here onwards, even the technical is accompanying the fundamental aspect of this company. From here onwards, we can expect the immediate target to be seen in Raymond's will be approximately around 23 to 2350 odd levels. But obviously from medium to long term perspective, we are having a very positive outlook in this company. But looking at for the short term perspective, today we have seen a very magnificent breakout in this counter on the basis of volume, on the back of volume. So from here onwards, one can expect the momentum to continue in the short run, even for positional, let's say 2 to 3 trading sessions also. So one can expect the immediate upside towards 2300 levels. And even on the downside, we are having a very strong support of the 20-day exponential moving average near to 2000 odd zone. Before that, we are even having a bullish gap. So there are n number of positive developments on the technical aspect of Raymond also, so which is accompanying the positive fundamental aspect of the same company. So for short-term traders, 2300 is the target, and medium-term one can expect even a larger targets in this counter.
2300 is the medium-term target coming in for Raymond, and yes, technically also a lot of positives, fundamentally also a lot of positive at work coming in for that particular counter. But Shesha, let's talk about Buildcon. Where do you see this one, or rather, why is this one in focus today?
The reason the stock is in focus today, holding up in the green, nearly 3% higher. Remember, it came out with this order win just about 2 hours ago, and that's when we saw that spike come in on the stock, holding up to those gains, 3% higher. The company said that they've received letter of award for a project worth about 1275 crores. They've received this order from MP Jal Nigam from Bhopal. So on the back of this order win that has come through, the stock is in focus. This will be done on EPC turnkey mode, and the completion period stands at about 24 months. So on the back of this order win, the stock is gaining in trade today.
Let's move on and talk about FMCG major Dabur. Why is this one in focus? They met with actually Nuvama, and we have some key highlights that have come in from this management takeaway. One, in terms of the total addressable market for the food and beverage, Dabur is looking to expand the total addressable market of theirs in that food and beverage segment of theirs. They expect 20% growth in Badshah Masala in FY24 is what they're expecting. Also, just in terms of when you're looking at it in the Ayurvedic healthcare segment, they said that they began advocating its Ayurvedic healthcare segment. It's a higher margin business as well, and obviously to allopathic doctors is what they're focusing on as well. So that is why they expect a growth coming in there. They expect in terms of the news flow that came in around honey, they said that with the higher sugar content, they said that it was not much of an impact in terms of the business because they are in line and in compliance with the FSSAI regulations. So not much of a worry coming in for Dabur on that front. International business also has continued to improve. Market share gains is what they've seen across 90% of their portfolios, and they see a potential recovery in the rural segment as well. So yes, these are the key positives and key highlights that have actually come in from the management meet that Dabur had with Nuvama.
Alright, moving on, then let's talk about IEX. Shesha, and this particular counter is in focus in today's trading session. We also had management on ET now also who spoke about the demand as well going ahead. But IEX, why is it in news?
Strong operational update. The stock is holding up with gains of over 1%. The company said that they've achieved total electricity volume of about 8,469 MU, which is an uptick on a year-on-year basis. It's an uptick of about 21%. Day ahead market volume too saw an increase of about 7.5% on a year-on-year basis. And as far as pricing is concerned, they've seen a jump up of about 33%. So market clearing price stood at 6.89 rupees per unit, which is an increase of 33% on a year-on-year basis. Real-time market volume too saw an uptick of 21%. So yes, strong operational data for the month gone by, because of which the stock is holding up. It is off the highest point of the day, but despite that, holding on with gains of nearly 1%.
Managed to speak to Rohit Bajaj, the Executive Director and Business Development Strategy and Regulator of Affairs at IEX, in terms of what is the growth they're expecting and what is going to be aiding the company in terms of the traded volumes going forward. Let's listen in.
As the supply is increasing, we are seeing volume coming up. In fact, cleared volume, the volume growth that we say, we have seen that. As I mentioned, in Q1 it was 8%, Q2 till now it is about 20%, 17-18% in electricity. And going forward, supply side is expected to improve even further, because as winter will set in, there would be many distribution utilities, many states where they will have surplus. They would come to the market to sell that, to dispatch that. So as the supply will ease out further in times to come, we expect to maintain the momentum which we have created in last 2 months, which we have seen in last 2 months. And till now also we are about 11% growth as compared to last year. We expect double digit is definitely positive, and it can further go up depending on supply easing situation in times to come.
All right, that's the management of IEX who spoke exclusively to ET now. But moving on, Osho, let's talk about Ramco Cement. Cement stocks are definitely in focus for various fundamental factors. But on the charts, how does Ramco Cement look to you?
Overall, as you have mentioned, that cement sector is looking very positive as of now. So talking about Ramco Cements, in the past 2 trading sessions, the counter has seen a very strong movement from the levels of 860 and is currently hovering around 920. So from here onwards also we are having a potential upside to test the 940 odd levels, which can be seen as the immediate hurdle for this counter. But once we breach the levels of 940, then from here onwards we can see a very strong up move of approximately 80 odd points from there onwards. So one can expect 1040 to 1050 points in Ramco Cement, the price of Ramco Cement towards 1040 to 1050 from short to medium term perspective. So overall the view is very positive from short to medium term perspective, and one should definitely try to accumulate the cement counters as they are in the buzz as of now.
Okay, let's move on and talk about the recent debutant on D Street, and that is Vishnu Vakash R. Pugalia. And why is, how was the debut on the D Street today, Ankita?
Prakash Pungalia, and what a listing it saw, and in fact even the investor interest that this counter is seeing. Vishnu Vakash so debuted at 165 apiece on NSE, which is at a premium of 67% to its IPO price of 99 rupees. On BSE, the shares were listed at 163 apiece, which is a premium of 65%, and the IPO was subscribed a total of 88 times on the last day of its subscription, and this was led primarily by the institutional investors who subscribed it at 172 times. So a good traction that this IPO saw, and of course saw a bumper listing of a good 66% premium over its issue price. So this counter is going to be in focus today, and it's up 48% in trade.
Right, moving on, Osho, let's talk about United Spirits, and how is this one looking on the charts to you? Because if you look at United Spirits, it did have a very good run in between, then a subdued performance coming in, and for the last 6 months, the stock is seeing steady increase. Where do you see it headed from here on now?
Now, in this financial year, the counter has, as you mentioned, that has already been in the uptrend, and from the last 2 months, the counter is consolidating in a very narrow zone near to 1000 odd levels. But on the technical front, what can be seen as a positive development in this counter, that it is facing a symmetrical triangle formation. So any breakthrough above the levels of 1040-45 on the spot levels, we can expect the breakout in this counter that can be continued towards 1100 on the very immediate basis, followed by 1140 from short-term perspective. So on the technical basis, on the basis of technicals, we are expecting a very decent up move in this counter, and one can definitely try to accumulate once the breakout comes above the levels of 1045 or even on the dips towards 1000 levels. So overall, the structure is very positive, and from longer term period, one can definitely expect a good returns in United Spirits.
Okay, let's keep an eye out on those levels over there for United Spirits. Let's move on and talk about Prince Pipes. Why is this one in focus? We have a note that is coming from Antique, where they are reiterating a positive stance on Prince Pipes with high conviction on re-rating potential driven by the expected 14% volume CAGR growth over FY23 to FY25. They believe the improving penetration in the south and east through the ramp-up of the Telangana plant and upcoming Bihar plant will be something that will be driving the incremental growth for the company. Other than that, obviously, the sustained margin expansion, premiumization, branding, and branding initiatives, as well as global tie-ups that have been taken by the company, will improve the mix of the company. In turn, that will be improving the overall growth of the company as well. They're expecting an EBITDA CAGR of around 14% over FY23 to FY25, as well as they're maintaining a buy rating antique on Prince Pipes, target price of 860 rupees per share. So let's keep an eye out on Prince Pipes. As of now, given up all this morning gains, trading with slight bit of a decline of 0.2% in trade.
All right, moving on. Let's talk about Bajaj Foods, because that particular counter is in focus on back of a block deal that took place today. About 32.4 lakh shares changed hands via block deal. That translates to about 1.3% equity. And post that block deal, you saw the stock see an up move as much as 3%, actually the biggest one since August 31st. But now the stock is also still elevated at those levels. We are yet to get confirmations in the buyers and the sellers in this particular block deal. But just like the way how IRFC and IDBI Bank and NHPC has been buzzing because of a block deal, we have Bajaj Foods also that is buzzing in trade today on back of the block deal. 3% uptick is what is logging in as we speak right now. It snapped a 2-day decline.
Okay, let's move on to another stock that is buzzing in trade, and that is Jubilant Foodworks Osho today, seeing a sharp uptick, 7% uptick as of now. And when you look at it, in the last 1 year it had not done anything, but in the last 6 months seems like this is picking up a bit of a momentum there. What are the charts now indicating for Jubilant Foodworks?
See, overall, on the broader perspective, the counter is still in the corrective phase, but the positive development that can be seen in this counter, that in current financial year, the stock has starting a kind of a rebound can be seen in the counter. And the plus point on the technical charts, that it has finally went above the 200-day SMA, which was a major hurdle for this counter. So now, as of now, the counter is sustaining above the 200-day SMA, and one can expect the rebound to continue towards the higher zone of 580 to 600 on immediate or short-term basis. But as of now, there has been the risk reward is not very much favorable. So one should definitely try to accumulate this counter on some kind of cool off towards the zone of 520, 510. And from there onwards, one can expect a gradual up move towards 580 from short-term perspective.
All right, that is the take coming in on Jubilant Foodworks. And Vinny, a lot of them have been talking about the fact that now that you will have World Cup, all these QSR companies are only going to see a sharp rise, though technically also Osho did say.
Also today, look at Devyani International also. That's another stock that has been buzzing in trade. So all these QSR names are surely seeing the sentimental effects at least.
All right, I think we should just 5 more minutes and then we should actually go and snack on some. But Ashesha, coming to you, AngelOne, thank you for diverting from the QSR space and talking about AngelOne. Why is this one in the spotlight?
This is why the stock is in focus, but the stock is reacting negatively. In fact, it is now down over nearly 3.5%. Gross client acquisition for the month gone by stood at 0.73 million, which on a month-on-month basis is an uptick of about 19% and 65% uptick on a year-on-year basis. But the company has lost market share marginally, and hence this could be a dampener for the stock. Overall market share stood at about 25.9% versus 26%, a marginal decline on a month-on-month basis. ADTO meanwhile saw a marginal uptick of 1% on a month-on-month basis and a whopping 129% on a year-on-year basis. But the street clearly is not excited with the kind of numbers that it has reported. It is declining in trade, nearly 3.5% lower.
That is AngelOne for y'all, but let's move on and talk about latent view. And Osho, on the charts, what is latent view indicating now? Last 1 month, 20% return. What is the upside expected now?
See, overall, post the IPO of this company, the counter has finally gained some kind of traction from the lower levels. So in the current financial year, the cycle of higher highs, higher lows can easily be tracked in this counter. And looking at the overall development in past 6 months, one can look for even a potential higher targets of nearly 490 on immediate basis. There has been a strong flat formation breakout in this counter, for which the target comes around 490, 500 odd levels. So one should definitely try to accumulate this counter even at the current levels for the mentioned target. And on the downside, we are having a very strong support around 410 to 415. So for medium term perspective, one should definitely look to accumulate this counter, and for aggressive traders, one should try to accumulate it with a stop loss of 445.
All right, so that's a view coming in on latent view. Ankita, coming to you, let's talk about Mankind Pharma. Why is it in the spotlight?
That's correct, Cheryl. Mankind Pharma is in focus today on the back of a note that BOFA came out with, and they have initiated an underperform on the counter with a target price of 1,610 rupees per share. Now, according to BOFA, growth at the cost of margin is going to be a key risk for this pharma company, and the industry and regulatory risk cannot be overlooked, and they feel that these risks might weigh on its valuations as well, and on the back of that they're maintaining an underperform on Mankind Pharma, and on the back of that the stock is going to be in focus today.
Let's move on to the next one, and that is SpiceJet. This stock is in focus today. Why is that so? And actually it's rising in trade after the carrier has actually approved a proposal when you look at it in terms of the proposal for overall, when you look at it for the aircraft lessor against their outstanding dues of around 230 crore rupees. Now the company has approved an allotting of 48.1 million shares to 9 entities at a price of rupees 48 per share, which is about a premium of 54% of its previous close of around 31 rupees as well. So on the back of this, today we're seeing that SpiceJet was buzzing in trade, but as of now given up those gains and trading with cuts of almost 6%.
All right, that is SpiceJet for you. But Osho, let's talk about Grasim, because we did speak about cement companies, but Grasim has dual businesses as well. But 15% uptick, okay, given the fact it's a huge nifty company, 15% uptick seems pretty reasonable coming in over the last 6 months. But do you think it will sustain?
See, overall, looking at the technical chart of Grasim, it is hovering near the lifetime high levels of 1900. So from past 3 years, it has been the range has been very much resisting for Grasim from the levels of 1870 to 1900. So currently also 1870 to 1900 will be acting as a very strong resistance zone. But once we see a very decisive breakout above the levels of 1900, then from here onwards one can expect a very strong up move in Grasim. So overall, one should definitely keep this counter in their radar, because there will be a three-year breakout that can be seen in this counter within some, let's say, some positional basis or in short-term basis. So one can see, look out for the breakout in this counter. So definitely the radar should be kept around the levels of 1870. But even for short-term traders, because we have seen a very strong V-shaped recovery in this counter, so short-term traders can look for buying opportunity in this counter for the immediate target of 1900 on short-term perspective. So overall, from short-term or even for medium and long-term, the chart structure looks very positive. So one should definitely try to accumulate as per their own perspectives.
All right, so that's the take coming on Grasim. Let's talk about media stocks as a whole. Like I mentioned earlier on in the day also, that the entire media stocks are actually rallying in trade. It was a top sectoral gainer, but what is fueling this rally in media counters? One of them is Zee Entertainment, is seen the biggest gain since August 10th. Sun TV, also you have NDTV adding to that list that is seeing good gains in trade today. Why is that? Because you have a lot of people betting on the fact that from Q3 onwards the ad sales will be good. And why is one is because of the festive season, and also you have cricket events like the Cricket World Cup as well. You have Prabhuda Leeladhar who said that the environment will be buoyant for ad revenue in Q3 on back of these events, and because of that you can see some buoyancy come in on these media counters as well, all of them buzzing in trade.
Absolutely, that's the news flow there. But Osho, you have picked out Zee for us as well. On the charts, what is Zee indicating now?
See, overall, Zee has seen a very strong move from the lows of 175 odd levels, and from there onwards there has been a strong cycle of higher highs, higher lows. As of now, what can be seen in today's trading session, that there has a sloping trendline breakout on the back of volumes. So from here onwards, one can expect the immediate target on Zee towards 290, and 290 again is a very crucial resistance zone. So fresh accumulation is advisable only above the zone of 300 for medium term perspective, but for short term duration one can even accumulate this counter at current prices for the immediate upside target of 290, keeping a strict stop loss around 260 for day-to-day traders.
All right, moving on, and the last stock, let's talk about CDSL because this particular counter is a buzz in today's trading session. Vinny, you have Ambit that's come out with a note. They've initiated a coverage on CDSL with a buy rating, and the target price that they've set is at least 22% higher than yesterday's closing price. So they are pretty much positive on CDSL. 1400 rupees per share is the target, and they're expecting the market share going ahead to actually double for CDSL. So Ambit Capital is giving a thumbs up to CDSL. As you can see, the stock is seeing a good gain in today's trading session. So just wanted to mark that as the last stock for Fatafat.
Absolutely, and that was the last stock of Fatafat, like Cheryl was mentioning. So thank you so much, Osho, Kunal, Ankita, as well as Ashesha for joining in with us. And thank you so much, viewers, for tuning into Market Fatafat. It's a good vibe from Cheryl, myself, as well as the team who put the show together.